All right. Welcome to Coffee with Marcus and Mark, or Mark and possibly Marcus. Next week with both of us, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In the show, we talk about what's happening and how we're trading them, what's happening in the markets and how we're trading them. It must be Friday. It is Friday, August 30th, the last trading day of August. Core PCE data is out. We'll see how this might impact the Fed's decision. The NASDAQ tries to make it 4 months in a row with a win. Gold trades at record highs. Lulu pops and Ulta drops. Plus, we'll take a look at our open positions. As you can see, there's a lot to talk about. So let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and thank you for being here. Let's go ahead and jump right to the charts here. And here I have the S&P 500. The S&P 500 actually starting the day higher and rallying. Looked like a pretty nice start to the trading session. We're still positive, but we are trading right around where we opened. So if we look at a 5-minute chart, we see that we pulled away from session highs and now maybe trying to fill this gap here. Now, the S&P 500, if we look at a daily chart, did finish flat for the session, down a quarter of a point, which is nothing for an index that closed at 55.91, almost 55.92. And looks like we're just kind of stuck here around that 5,600 level as we head into the 3-day holiday weekend. Now, the Dow, looking at a daily chart yesterday, finishing higher by 0.6%. A new intraday record high yesterday for the Dow, also a new closing record high for the Dow. Today, the Dow rallied a little bit, but also trading right around where it began the session, up 0.1% right now, just 37 points for the Dow, but still positive for the trading day. Now, if we look at the NASDAQ did ended yesterday with a loss, down 0.25%. Today, higher. And also, just like the S&P, pulling away from session highs, but still positive for the session, up 0.5% right now. Now, it's the last day of the month. And if we go to a monthly chart here, what a month it has been. It's hard to think back and realize just the state of panic that the market was in early on in August. The NASDAQ now positive, just barely clinging on to gains for the month. If it does finish higher today by, what is that, about 0.5%, the NASDAQ will be positive for the month, and it will be a nice monthly gain. I think I said at the beginning that it would be the fourth winning month in a row. No, that would be for the S&P 500. The NASDAQ actually finished lower in July, so a correction there. Nonetheless, look at this move here. So even if it's a down month for the NASDAQ, what a comeback. The NASDAQ was down 10.7% for the month and is now just flat. So a huge recovery off of those lows. If we look at the Dow, same situation for the Dow, not down as much, down 5.4% at one point, but now trading higher for the month by 1.3%. That's just a super impressive move for the Dow to come off of a 5% loss to now be trading at record highs. And then the S&P 500, this is the index that actually is trying to finish with its fourth consecutive monthly gain. We have a win in May, June, July, and now, unless there's a huge reversal for the trading session, the S&P looks to end the month up around 1.6%. Of course, we still have a lot of trading today, but shouldn't be any real surprise in a big drop at this point. Even if we finish the trading session slightly negative, the S&P should finish the month higher. And the S&P was down as much as 7.3% in August before reversing. So what a comeback. And yeah, we go from a situation like this. And We talked about it. There, of course, there were some concerns, and we welcome the volatility, but we definitely thought this was an overreaction to everything that took place. It was kind of a snowball, a perfect storm of a few different events that took place at the same time. But fundamentally, it really didn't seem as though there were any significant changes in the market to cause this type of move. And it ended up being an overreaction and a perfect V-shaped recovery. S&P 500, as we just discussed, now positive for the month with the Dow and the NASDAQ close, very close to ending the month positive, but it will probably come down to the wire for the NASDAQ. Now we have to look at the economic calendar. And here we see that core PCE price index came in line with expectations with an increase of 0.2%. This is higher than by 2.5% from a year ago, which is perfectly in line with what was expected. So no real surprise there. A little movement, tiny bit of movement this morning, but that's what I was saying. The key events this week, NVIDIA earnings on Wednesday, and then also core PCE on Friday. But unless there was a surprise, didn't expect a whole lot of movement or a big reaction there. And here there was no surprise at all. Personal income up 0.3%. And we had revised University of Michigan consumer sentiment and revised University of Michigan inflation expectations. The inflation expectations, consumers expect that for next year, inflation will increase by 2.8%. And this is the lowest expectation since December of 2020. So the Fed targets historically 2%, and consumers thinking it might be a little bit higher than that. But compared to where we've been and the concerns over inflation over the last couple of years, that lowest reading since December of 2020 is definitely a positive there. Now let's take a look at some market movers here. Let's go back and take a look at CrowdStrike. CrowdStrike definitely having a rough time after that software update wreaked havoc on all of their systems, just causing chaos globally. And from that point, we were down as much as 41% approximately. And now making a comeback here today, up again. They did receive an upgrade. HSBC came out with a buy rating for CrowdStrike, saying that the bad news is behind them. And yeah, a little bit of a comeback. Still not where it was trading prior to that outage, but a nice recovery. And just like the broad market, making these lows here early August with that drop there that we saw in the overall market. You have to take a look at some earnings here. We could take a look at Lululemon. Lulu. Actually, Lulu early on popped higher, was trading at 270. Right now, down 1.5%. So a bit of a reversal. I said in the notes that we had a pop in Lulu and a drop in Ulta, but now that pop is more like a drop. So looking at Lululemon, if we take a look at earnings here, we had an earnings beat, but a revenue miss. And more important here is that there was a significant sales drop in recent quarters, and revenue guidance for both the third quarter and full year are weak. So not only a revenue miss, but then guidance being weaker than expected. Initially gapping higher, but since reversing and now trading down for the session. Now, although it's a cosmetic company that focuses on makeup, this one's looking pretty, well, it's down. Ulta. But hey, a little bit of a reversal here. We have to give this one a little credit because we were down 6.5% at the open. and now down just 2.5%. Still a rough day for Ulta. If we look at earnings here, earnings miss. We also have a revenue miss. In pre-market, it was down 8%. The full year guidance was also trimmed after a decline in same store sales. So Ulta having a rough day, but definitely coming off of those session lows. Talked about Abercrombie and Fitch this week, A&F reporting earnings and a big drop there. Even discuss this as a possible wheel trade with some puts available with some nice premium down around here. Nice 2-day comeback. And Abercrombie and Fitch, Citi upgraded Abercrombie and Fitch to a buy, and basically saying that this sell-off presents a buying opportunity at an attractive entry point. This one, all in all, seemed like a pretty solid earnings report and a decent company. So that's no surprise to me, but nice to see a comeback here after that drop in A&F. Let's take a look at PowerX Optimizer here, and let's go to the WTF strategy. And I am waiting for WTF trades, but I understand this is how the strategy works. We're looking for a significant oversold situation to have a buy signal, and we also prefer trading the S&P 100 and NASDAQ 100 because the S&P 100 and NASDAQ 100 contain their indices that contain quality stocks for the most part. And if you do get that oversold drop, then they tend to rebound nicely. The probabilities drop when we go into other stocks, which are not part of those two indices. S&P 500, I think, could be considered, but our preference is the S&P 100, NASDAQ 100, and we're fine waiting for that perfect condition. It's just like fishing, right? Sometimes you go out, you're not going to catch anything, but it's okay. It was still a great day. And here, no new signals. It's still a great day. But when the time comes and when you get a bite, we want to be ready for it. So no opportunities today. Maybe we'll get some opportunities next week. Now let's take a look at the wheel strategy. And BP is a position that both Marcus and I own. And we are at 34.50, a bit of a gap down today. And of course, it's always fun when you're in a stock and it's higher. But with the wheel, we're collecting premium. And this is where I did not get out of those 34.50 calls. So they're expiring today, unless there's just this crazy move out of the blue and this thing rallies higher. Looks like those calls will expire worthless. And then I will consider selling calls at the beginning of the week. Now, CSIQ, after a couple of rough days, yesterday, looks like we might have some support here now. Yesterday, finishing higher by just under 1%. And then today, up 1.9%. I mean, these are basically quiet days for CSIQ when we're higher by 1 or 2%. But it's nice to see that there is some stability. It looks like maybe the 1250 level is attractive for traders right now. And again, I think at this point, rate cut is priced in. So investors want to know what's going to happen beyond that, right? And so we actually could take a look at Fed funds futures and go here and just see what probabilities are showing right now. The Fed meeting in 19 days, 2 hours, 43 minutes, and 44 seconds. So not too far away, but still a couple of weeks. We see that Fed funds futures pointing to a 1/4 point cut. And this is what I am expecting for September. There's still a chance for maybe a 1/2 point cut. I don't see that unless there's a big shift in some data that we see, some surprising data. And it looks like Fed funds futures are also pointing to a cut in November. And that's starting to sound likely based on where we're at and what Powell has said. December right now, a 1/2 point cut is what's expected. Some analysts saying 3/4 to a full point is their expectation or forecast for this year. Not much time left. You have 3 more meetings taking place this year. We'll have to see. But I think that the September meeting could be a real interesting one because I do expect a cut here, but also there's going to be some discussion on what the Fed is expecting moving forward. And it could be that an accelerated timeline for cuts if they expect that the economy is going to be okay. You have that soft landing scenario and what appears to be inflation under control. And there is the potential to start to see some more cuts. Will we get a full point this year? I don't know about that, but I'm not going out on a limb here by saying I expect a cut at the September meeting. Right now, it's totally priced into the market, but that is what I expect. And then we'll just have to see what the Fed says to see if there's a shift in probabilities in November and December. So right now, things looking pretty good for cuts, and inflation based on core PCE data that we had this morning is right where the Fed wants it to be. So going back here, open positions, Halliburton pulling back a little bit to this lower range here. Chart-wise, not too concerned about it, but nothing for me to do with this one. Marcus has Kohl's at 21.50. He's collected a lot of premium on this one, and he'll be back next week to discuss Kohl's and share where he's at there. I know he's also in Merck, and Merck working out nicely. Assigned at 120, but he has collected some premium, so he has a lower break even. Right now, Merck trading around 118. So nice comeback for Merck after this earnings drop and that early August move. Looking pretty good now. We're both in UPS. UPS has been a little quiet here, but slightly higher for the trading session. Nothing to do with this one. Still sitting on some UPS shares. With that said, keep in mind that next week we do have a holiday. So it is a 3-day weekend, a holiday weekend for us in the US. I don't want to look at the earnings calendar. Let's go to the holiday calendar here. So Labor Day on Monday, September 2nd. So no video or coffee with Marcus or Mark on Monday, but we'll be here on Tuesday together. And hey, I just want to remind everyone that this holiday weekend, if you've had a little too much to consume or you just have a headache, here's some great advice. Take 2 aspirin and stay away from children. That's what the bottle says. All right, with that said, hope you enjoyed this session. Hope you enjoyed the video. Hope you had a great trading week. And if you like these videos, please give it a thumbs up. If you're new to the channel, please subscribe. And if you know someone who could benefit from this market commentary, where we try to digest everything into a 20-minute session so you don't need to spend countless hours sitting in front of the television listening to some nonsense that talking heads are spewing. And also you get a little insight into how we're trading the markets. And if you like that, please share with a friend. Until Tuesday, happy trading, everybody.